Hello and welcome to AI Market News by LM. We've got some major developing news to cover. A dramatic escalation in the Middle East is sending absolute shockwaves through global energy markets. The possibility of a wider war, well, it just became very, very real. In this explainer, we're going to break down exactly what this seismic shift means for the world economy and for all of us. Let's get right into it.
All right, so here's our game plan for today. First, we'll look at the geopolitical catalyst that's rocking global stability. Then, we'll trace the immediate impact on energy prices and see how that turmoil is now spreading to global markets. From there, we'll explore the incredibly tough dilemma facing central banks, and we'll wrap it all up with what we need to watch next. Okay, so let's get right to the heart of the matter, this escalating war. What began as a more contained regional conflict has just completely boiled over, and now it's directly threatening one of the most vital arteries of the entire global energy supply.
And wow, this headline really just says it all, doesn't it? The threat to close the Strait of Hormuz? I mean, we're talking about a tiny, narrow waterway where a massive chunk of the world's oil has to pass through. Threatening to close that's what put markets on immediate screaming high alert. It's a direct challenge to the flow of global commerce, plain and simple.
And the speed of this escalation, it's just staggering. Think about it. In just 20 days, we've gone from a regional conflict to direct strikes on major energy infrastructure. But the real game changer? That was when Tehran came out and declared energy sites in neighboring countries. We're talking Saudi Arabia, the UAE, Qatar, as legitimate targets. And then, boom, the missile strike on the world's largest LNG plant proved this was absolutely not an empty threat.
So, no surprise here, right? The most immediate, most obvious fallout from these attacks is a total firestorm in the energy markets. The fear of major supply disruptions is getting priced in literally by the second. And the numbers we're seeing are, well, they're just staggering.
So first up, we have the international benchmark, Brent crude, which just rocketed past $115 a barrel.
And right behind it, the US benchmark, WTI, surged up towards that critical $100 mark.
Okay, and this chart lays it all out for us, clear as day. Take a look at the price jump between Brent and WTI. That big gap between them, that's traders basically screaming that they believe international oil is way more vulnerable right now than the supply here in the US. And then you've got natural gas, also surging, obviously reacting to the news of that damaged LNG plant. And this right here, this is the critical vulnerability that has everyone on edge. You see, unlike crude oil, where countries have strategic reserves stockpiled, there are no strategic reserves for liquefied natural gas. None. So when facilities that produce a full 20% of the world's supply are damaged, that supply is just gone. It's a massive, immediate shock to the system, and it's especially painful for energy-hungry nations in Asia.
All right, but this energy crisis isn't just happening in its own little bubble. Oh no, the shockwaves are now spreading fast, hitting stocks, hitting currencies. What we're seeing is a classic flight to safety. Investors are dumping what they see as risky assets and running to buy safer ones. And let me tell you, some markets are getting hit way harder than others.
Let's take Japan as a perfect example. This chart of the Nikkei index, it just shows a massive drop, its largest since 2005. And why? Well, it's because Japan is incredibly dependent on energy imports from the Middle East. So a supply shock like this isn't just a headline, it's a direct, painful hit to its entire economic engine. And that pressure on the economy, it translates directly into the currency markets. We're seeing speculators and hedge funds piling on bets against the Japanese yen. Short positions are just exploding as the currency gets weaker and weaker, heading towards that 160 level against the dollar. And the logic here is really simple. A struggling, energy-starved economy is going to mean a weaker currency.
And this market snapshot, well, it pretty much paints the picture. It is a sea of red for US equities. The S&P, the Dow, the NASDAQ, all down. At the same time, we're seeing that flight to safety in the currency markets, with the US dollar gaining strength against the yen. It's an unmistakable signal that investors are running for cover, and fast.
So all of this chaos creates what you could call a nightmare scenario for the world's central banks. They are absolutely caught between a rock and a hard place. Do they step in and fight this new wave of inflation that's coming from soaring energy prices? Or do they try to support a global economy that's suddenly looking very shaky and threatening to slow down? It's a terrible choice.
And honestly, you don't have to take our word for it. Fed Chair Jerome Powell's own statement here just captures the problem perfectly. He's basically admitting, hey, we see the risk, but it is way too soon to know how bad the damage is going to be. That level of profound uncertainty, it's basically paralyzing for policymakers.
And make no mistake, this isn't just a problem for the Fed. We're seeing central banks all over the world in this exact same holding pattern. The Bank of Japan, they're grappling with price pressure and a tanking yen. And meanwhile, over in Europe, the ECB and the Bank of England are also widely expected to just sit on their hands and wait. Nobody wants to make a big move until they have a much clearer picture of the economic fallout.
Okay, so with all this uncertainty swirling around, where do we even look for answers? Where are the clues? Let's turn to the key data points and events on the immediate horizon that are going to give us the first real read on how economies are actually handling this massive shock.
All right, looking at the economic calendar from investing.com from March 19th, we have several really key events to watch. First up, at 5:30 a.m. Eastern Time, we get U.S. initial jobless claims and the Philly Fed Manufacturing Index. Those will be our first real clues about the health of the U.S. economy. Then, just 45 minutes later, at 6:15 a.m., all eyes are going to be on the European Central Bank. Has this crisis completely changed their thinking on interest rates? We're about to find out.
And really, that brings us to the one critical question that we're all left with. Markets have obviously reacted, and reacted violently. But have they truly priced in the risk of a full-blown, wider war that takes even more supply offline, or is there still a lot more pain to come? This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.